Hey everyone, I'm Seth with Alta Vista Insurance. I'm here with my associate Mark Lamb, and we're here with Edward Hull from CTS, which is Carlsbad Tax Services, local CPA firm here in Carlsbad, California. We had Edward come in today because I wanted to bring him in to talk about some of the new proposed tax plans, and then also talk about just some questions that maybe some of our clients would have in regards to some of those new changes, how they can maybe stay out of paying more money than they have to.
Absolutely.
And maybe what are some things that they can add to their portfolio in the form of different strategies or practices to maybe keep more money in their pocket. So thanks for coming over, Edward. Can you just give us a couple of the bullet points on the new proposed tax plan that Biden's going to be rolling out here in the next few months?
Sure. Just to brief you, these are proposals too. So remember, nothing is passed in law. The biggest ones are going to be for people earning more than $400,000 a year. Your tax brackets are going to go up. He's going to bring back the 39.6% tax bracket, what it is currently at 37. Social Security, he's talking about bringing back Social Security once your W-2 wages go over $400,000. What most people don't understand is your Social Security is capped currently at $137,500, and so you stop paying Social Security. Well, he's saying that once you earn more than $400,000, you're going to restart paying into Social Security at the same rate, of course. So this would be your boss and your employer.
That could be a significant amount.
That could really be a significant amount, particularly if you're talking about $1 million wage earner. He's going to now be paying Social Security tax on additional $600,000 after already paying Social Security taxes on the first $137,000.
Yeah.
So, and that, of course, you're talking about 6.45%, and then the boss also has to match that half. So that's a couple things. One thing I think that's pretty cool is he's coming up with a 10% tax credit for Made in America for American corporations that are going to work in America, hire American people. I think that's going to be a wonderful strategy. So we were talking earlier, I think, Seth, about some retirement plans and proposals for higher income earners. Now, obviously, currently, if you're working at a W-2, you can defer on your 401k plan up to $19,000. If you're over 50 years old, you can cap on another usually $6,000. Your employer can do some matching. Most companies will do a little bit of a match. So for a W-2 worker, they're obviously not going to be able to take much advantage of that. However, if you are a small business owner, and when I say small business, that's anywhere from $100,000 to probably $3 to $5 million of income. You as an owner have great possibilities for retirement plans. You could set up company 401k plan where you can match dollar for dollar up to 25% of your wages to go to a maximum deferral of $56,500 currently. You could also set up what's called a defined benefit plan. Now, these plans are specifically for key employees, high-income earners. In order to get these plans, you generally have had to pay yourself a salary well in the $100,000 range for 3 or 4 years. You can set up a defined benefit plan. You will have to go to a specialist such as yourselves or a retirement plan specialist. These plans, though, really allow you to put up almost unlimited amounts of money because the plans are based on your life expectancy and when you're going to retire and what your rate of return is going to be in these plans. But I have clients that are currently putting away anywhere from $100,000 to $400,000 each year into these types of plans. Again, they're not common for most people, but they're a huge help. And also getting back to the small business owners, you don't have to get that elaborate. You can set up a solo 401k plan. You can have a SEP IRA plan for your company. You can have simple plans for you and your employees. Now, all these plans are basically where you defer part of your paycheck. If you're the boss, obviously, you want to choose to match your people. You can match it. You would get tax breaks for all those types of things as well. Some people find it's a good perk. Each one of these plans has different dynamics about dollar amounts, how much you have to contribute for your employees, who's participating and who's not. So, if you want to get more information about retirement plans and those types of things, certainly I could give you some basics, but I would turn you on to certified financial planners, registered advisors, or those types of people. And we can sit down, obviously, with you and your advisors and discuss these types of plans and how they affect your business.
The biggest takeaway is that, hey, we got some options.
Right,
for business owners, that are wondering, hey, what can we do to put money back into our pockets?
Absolutely. And, and one thing, too, about business owners, a lot of people forget that, once you retire, if you've been a good business owner, you do have healthy retirement plans. You might have rental properties. You might have other types of investments. This is absolutely the time you need to get with a CPA or a professional. Attorneys, you might need trusts involved to find out what your options are. A lot of people think, oh, I'm retired, I can't do anything. I have a client, 70 years old now, recently got their broker's license. They have 5 or 6 rental properties. They formed an LLC, bought themselves a car, took advantage of some of the new tax laws. They're deducting expenses that would normally be considered personal expenses and non-deductible. However, they're running a legitimate business. Now, obviously, there's some rules that you have to apply to those, but that's one way. Higher income people and people with maybe passive income and they don't have a lot to do, go back to work for yourself.
That's great.
It's a good strategy. Because a lot of people that we work with are business owners or they are property owners that have investments in the form of real estate and they generate passive income through those assets. So they may not even be thinking about doing something like this that could offset some of those tax liabilities, which is great because everybody's looking to make some adjustments, especially with some of these new tax plans that are going to be coming, or the proposed tax plan that Biden's rolling out. And I think the theme that we were talking about earlier before was that taxes are going up.
Yeah, if you're a high income earner, if you're earning over $400,000, just prepare to have your taxes go up. I don't want to get into the Democrat-Republican strategy because both sides have raised their taxes over the years. The bottom line is on these things is Biden's proposals are going to try to take care of people under $250,000 of income, similar to what President Obama had done. He's looking to expand some of the credits into the ACA, Healthcare Acts, and too. But, there are certainly still going to be ways to get around some of these. When you brought up real estate, none of the rules for 1031 exchanges have changed. And that's where you can have a property that has $300,000 or $400,000 of built-in gains. You might be able to do an exchange, buy another rental property, you pay no taxes. There's, under the new rules, there's things called opportunity zones, where you definitely can roll over your long-term capital gains into an opportunity zone credit area. These are defined by the state and the federal government, and you can defer all your gains. Now, 1031s will work for federal and California. The opportunity zones are not California certified or approved, but if you can save taxes on, say, $1 million of capital gains and not pay $200,000 federally, and maybe you only pay 9% to the state, obviously, that's a great tax savings. And those opportunity zone credits, they're fairly new. There's a lot of new regulations and complications to them. But in essence, you need to be in them for up to 5 to 10 years, and then you will reap the most amount of tax benefit at the end.
We were talking earlier, too, about what are some things that those business owners or those high net worth income earners can do to maybe offset some of these things. And I think you brought up some of those strategies in the form of retirement plans that are out there. What would you maybe recommend to those type of individuals, like either business owners or high net worth earners that can take advantage of some of these additional products or services out there?
Yeah, obviously the retirement plans for the small business are your best bet, regardless. If you need new equipment, the Section 179 depreciation rules are still in place. So if you need $100,000 worth of new equipment for your business, go out and buy it before December 31st. You can finance it. You can deduct 100% of that on your taxes for this year. If you're a construction company and you need a new truck, go buy your new truck before December 31st. There's a good chance you could write off 100% of the value of that truck. Again, some of these have limitations depending on your overall business income, but if we're talking about the average small business that's gross revenue around $5 million or less, you should be able to take 100% advantage of these rules, for particularly the Section 179 in buying new equipment. Everyone, with all the stuff that's going on, everyone needs the new technology. They need new Zoom, they need cameras, they need all these things. Buy them now before December 31st. I always get the call in January and says, Edward, I did this, and I say, Happy New Year, nothing we can do. Yeah. Talk to your advisors.
Yep.
I
Talk to your advisors.
It surprises me every single year that someone will come to me and say, Edward, I did all this stuff and I got all this money. And I said, I've known you for 25 years. Why didn't you give me a 5-minute phone call?
Yeah.
We could have saved you the money. To give you a perfect example, the client inherited an IRA. they were told that they needed to take the entire distribution in 1 year. They took the entire distribution and lost about 40% of it to taxation.
Wow.
Now, had they talked to me, an advisor, almost anyone, and spent 5 minutes of time, they could have learned that they would have been able to roll that over. And in new inherited IRAs, you don't have to pay tax, or excuse me, you do have to take a required minimum distribution, but it's over a 10-year period. Used to be you could do it over your lifetime. They did change that rule in 2020, but there's a classic example of particularly with COVID, people are saying, I need money, stuff's going on. Ask some people first before you take the 5 minutes to make the phone call. You can this year take up to $100,000 from your IRA. As people know, there is no penalty. You can pay that tax over 3 years. That might also be a strategy for you if you're having a low income year to take some money out and maybe pay it at a lower tax bracket over the 3-year period. So those types of strategies are always going to be there. At the end of the day, as we were talking about earlier, if you're a W-2 employee, there's really not much you can do. You've got your mortgage interest write-offs and you have your charities. Interesting note to charities, by the way, for this year, you will be able to take a $300 off the top deduction, whether you itemize or not, which, that's fine. But if you really don't want to pay any taxes, guys, you can give away 100% of your earned income this year and deduct the whole thing as charitable. So there's your loophole for paying no taxes.
Philanthropy.
There we go.
Philanthropy. We could all use a little bit of that.
Yeah, I bet a lot of people can right now too. So that's a good idea if somebody is looking to maybe donate or make a generous contribution to a non-for-profit or somebody that they work with that they can donate to a charity of their choice. That's a great way to also reduce their tax liability.
Absolutely. Yeah, and speaking of the high income earner, and charitable donations, you can donate your required minimum distribution from your IRA. It doesn't hit your income taxes, so that might put you in different tax brackets because you're no longer having to count that income. One of the things President-elect Biden has talked about is bringing back the piece itemized deduction limitations. So again, if you go over a certain dollar amount of income, then your itemized deductions are reduced. Well, again, if you don't have to pay tax on your IRA, it could be that your taxable income is lower and you will not be phased out of some of these deductions.
Oh, that's great.
Yeah. So, I think in the new year coming up, we're going to see a little bit of the old, a little bit of the new.
Yeah.
Certainly, we're going to see talk on health care and credits for that type of stuff. California is going to be, now requires health care. California is now rolling out their new health care plan. So you're going to see some of that. Overall, remember, folks, these are proposals. None of this is set in stone yet. You still have a divided Congress. They're going to fight tooth and nail for their sides. And, but I would expect some changes in the taxes, and I would certainly expect the top rates to go up. And that's, on average for people that are going to be above 400,000.
Yeah, so that's a lot of the clientele that we work with. A lot of our clientele are, property owners, or they own their own business and they're business owners, and they're looking at, ways that they can maybe, try to keep more money in their pocket, especially if things are looking like they're, going to be increasing. What are some things that they can implement into their portfolio, or even just to work with a CPA, because we know a lot of real estate professionals that we work with, and I think the number one takeaway that we always say is, you want to work with subject matter experts, people that really have their, your best interest in mind, and people that can solve your problems. And if you're not working with the CPA, it's time to start working with the CPA, especially if you're in this income bracket, or if you're working with real estate agents, or you are a real estate agent or a real estate investor. Working with a CPA is probably the number one strategy I would recommend. If you aren't doing that right now, hire a CPA. Edward Hall over at Carlsbad Tax Services right here in Carlsbad. We recommend him to a lot of our business owners, even real estate partners that we work with. And I'm sure he'd be more than happy to sit down with you and offer his consultative services.
Absolutely. In fact, we do offer a 30-minute free consultation to anyone who's interested. And even if you're working with the CPA, you just want a little extra advice, feel free to give us a call. I'm happy to help you in these strategies. And guys, getting back to your point too of working with advisors, I find it very, very important that, not only am I in the meeting, your lawyer's in the meeting, your insurance people are in the meeting. You really, particularly if you're a high income person, for one, if you're not working and you don't have a trust, please immediately call somebody and get a trust.
Yeah.
Number one, straight
You
off
need to
the
put
bat.
the team together,
I'm not
right?
an attorney, but absolutely you have to have a trust in
Yeah.
California, or you will get completely screwed in the courts if somebody dies. So, and again, in that tone, we work with lawyers and brokers and insurance people. We can all get together at the team, make a plan for you and your clients, and it's part of where a CPA really earns their money there.
Yeah.
The household individual working W-2s can't always do a lot of strategies for them, but small business people, and particularly if you've got passive income, passive earnings, real estate, you absolutely want to be talking to some professional that can give you, because no one can know everything.
Right.
And, not only will people come to me and ask me questions, I can give them sources to other people. They might teach me a thing or two as well. So there's absolutely nothing wrong with asking for help.
Yeah,
so,
no.
And it's not to toot anyone's horn, but in this day and age, particularly in California, you want professional, competent advice, and you want to know what you're being told is true.
Yeah.
You want to make sure your assets are safe for you and your family. If you've worked hard for these things, you want to pass them on. You don't want to lose them. So to Seth's point, I appreciate the CPA plug, but I would just say in general, you need to speak. Well, you need to speak with your professionals. There's too much at stake.
Yeah, that's why I've been on this kind of mantra for a while about making a plan and working with subject matter experts and kind of creating a healthy ecosystem for you. If you are a high net worth income earner, or you're a real estate investor, a property owner, and you're generating passive income, you need to surround yourself with these type of professionals: the CPA, your insurance agent, your attorney, your bank.
Absolutely.
To make sure that you have the proper financial protection, because as you build wealth, you need to have these people putting a plan together for you, and sometimes the plan changes, or sometimes something happens and you need to adjust or pivot.
Absolutely.
But you need to have those people that are the experts in their field that can solve those problems for you, because everything has gotten so specialized, and you really, like you said, as being in California, if you're in this type of bracket, you really want to be working with professionals and surround yourself with a team, like you said, Mark.
Oh, absolutely.
And have the team together.
Absolutely. And hey, I'll be honest, I'm not a big fan of attorneys, but give them the $500 or $600 an hour now up front before you have to write them a check for $100,000, to solve a court case, or somebody fell, or you didn't have your trust in place. The main reason I bring up the trust, and just to make a quick point there, is probate. Probate says that if I have a house that's worth $1 million and I owe $900,000, in the eyes of the law, it's worth $1 million, and you will pay your attorney based on the gross value of your estate. And if you don't have a trust and you have $1 million house, like I said, with $900,000 of mortgage, you would think it's only worth $100,000. Well, in the eyes of the law, when it comes to your legal fees, the attorney gets paid approximately $47,000 per million.
Wow.
So again, please, if you don't have a trust, you have to get a trust.
Some other things that you were talking about earlier in regards to the tax plan that are also being proposed. Is there anything else in there that is just really going to maybe not shock people, but maybe something that people aren't really aware of that's coming?
One of the things that you might remember, I think it's probably been 15 years now, was the first-time home credit. So they're now proposing under President-elect Biden's rules is that they would bring back actually up to a $15,000 home buyer's credit.
That's awesome. Before we end, I just wanted to ask you one real quick question, because we talked about strategies and things that our business owners and high net worth income earners can do. And what are some of those products or even those strategies that they can take advantage to offset their tax liability or to keep more money in their pocket, like you said?
Right. Well, again, for the high income earners, there's the traditional IRAs and Roths that they're really going to be excluded from for the most part. However, one strategy that is been in place for quite a while is what's known as a backdoor IRA. Essentially, this says if I'm working at a job, I'm a high earner, I've maxed out my 401k at work, I cannot contribute to an IRA and get a deduction. However, you can make a deduction, or you can make a deposit into your IRA account, and it will be what's called a non-deductible IRA. So you will not get a tax break. However, you can then immediately convert the non-deductible IRA to a Roth IRA. Now, normally on conversion of a regular IRA to a Roth IRA, you would pay tax as a normal distribution of your income, and you would not pay any penalties, but you would always pay income tax on the conversion. Now, under a backdoor Roth IRA, If you remember, we said it's a non-deductible IRA, so you are not receiving a tax break. So then you can flip that over to your Roth IRA. The advantage of a Roth IRA is that you do not have to take your required minimum distributions at 70 and a half. Your children can inherit the Roth IRAs. They do not have to take minimum distributions. The Roth grows tax deferred. All the money that's in it is tax deferred. When you take it all out, it's absolutely tax free. There is no upfront deduction for a Roth. And so usually people say, what is the difference between the Roth and the traditional? A traditional, if you meet the income requirements, you can get a tax break. With a Roth, there is no tax break up front. And if you're over certain income levels, you cannot contribute, and that's why you would speak to your advisors about getting a backdoor approach. For small businesses, there's also the 401k plan. They have a simple plan. There is a SEP IRA plan, which SEP IRAs are really convenient because you can actually set up and fund a SEP IRA all the way up, if you're a business, until September of the following year if you're on extension, and still get the tax break for the year before.
Oh, yeah.
So that means you could go put your, say, corporation on extension. You're not going to file your corporate taxes until September of 2021, and then you can still take a deduction and fund it all the way up until September of 2021, yet still take the tax write-off for the tax year 2020 on your returns. So those are certainly strategies that you would want to look at. Near the end of the year, obviously, you want to spend any money you can. I think we talked about some of that. And again, for the average individual, you also want to look at, do I have any money left in my FSA accounts for my spending? Do I have any child care money left in those accounts? Is there anything left in my medical accounts? Because some of those plans are use it or lose it. If you don't use your money, you're not going to get into it. Or if you don't use your money, you lose it.
Lose it.
You're going to lose it, so you're not going to get it.
If you don't use it, you lose it.
You lose it. And again, some of those are smaller things, but people are kind of surprised at how many little things you can do at work, such as child care credits or little health savings accounts, depending on, again, what your strategies are. $5,000 or $6,000 a piece, $7,000-8,000 a piece doesn't sound like much, but when you're doing these strategies over 10 or 15 years, and you're talking about I saved $3,000 over 10 years, that's $30,000. That's absolute real money.
That's a lot of money.
It's absolute real money.
Now, what about for those people that are small business owners that are or in this same type of income bracket, and they are maybe potentially thinking of maybe now working from home because everything is more remote, and they may have had an office, and now they can get that home office credit. Does it make sense for these type of business owners to maybe move more into their home to conduct business because of the way things are changing, and also to keep the tax liabilities and exposure a little bit lower?
Yeah, great question. I mean, obviously, if you were used to working in your office, if you're a business owner, you had to shut down your office for COVID, and you find you're working from home, absolutely, you can be reimbursed for your home expenses as part of your pay. A lot of people don't realize you can reimburse your employees for some of these expenses. Obviously, there's certain plans and rules you have to follow, but if that's something you want to try to help your people, because if you're not paying rent and you're saving some money, maybe you give them a little extra to help cover some of their costs during the COVID. If you had to buy special equipment that while you were working from that home office, again, it would qualify as business equipment. If you had to get Zoom software, new computers, those types of things. If you're a business owner, those potentially are going to be write-offs. If you're an employee, if you remember under the last tax code, they took away all unreimbursed expenses for work. So if you're in that situation, then you ask your boss about it, because your boss can reimburse you. He gets 100% deduction for it, and you don't have to pay income tax on the money. So those are a couple of things you can do when you're working from home. And again, if you've set up studios or things like that, if you have to be on the Zoom meetings all the time, then potentially you do have write-offs for all your equipment, all your sound, whatever you're doing.
Yeah.
For that.
Great
that's great.
information.
Yeah, it's great information, because a lot of people are thinking about that. The small business owner that may be closing down their lease and maybe moving into their house to save some money or to offset some of their taxes and liabilities, and just put more money in their pocket. That's one of the best things. I think you said, the number one thing a CPA tries to do is, save my client money and keep more money in your pocket.
Absolutely. That's what it's all about. The more you can keep in your own pocket and less from the government, that's what our job is to do.
Yeah, no, that's great.
Yeah.
Any other things you want to add to just, educate our clients or just give them more valuable information about some of the things that may be proposed that are coming, or just other ways that they can just keep themselves from having to pay more money than they have to?
Yeah, I think we probably covered most of the ways they can get out of, and I hate to end on a bummer note, but one thing that is on everyone's mind right now is the EDIL loans and the payroll protection plan loans. The surprise of the payroll protection plan loan is, yes, it may be forgiven, and let's hypothetically say you received $100,000. You spend it all on your wages as you were supposed to. They will forgive the $100,000. However, under the current code section, you will not be able to deduct the $100,000 that you spent from the government. So this is going to shock a lot of people. Their bottom line is all of a sudden going to increase by whatever their loan was because they're no longer able to deduct it. Yes, they got the free money from the government, but that's going to catch people off guard, and it's certainly something you want to be on the lookout for. The EDIL loans, if you have received one of these, there's some pretty strict guidelines and regulations on those, but if you're using them for business, I'd say don't be afraid to get that loan. It's a 30-year fixed rate at 3.75.
Wow.
That's good.
They're talking about bringing those back.
We just wanted to close out today. Just say thanks to Edward Hull from Carlsbad Tax Services for
Thank
coming
you guys
by.
very much. Appreciate
Thank
it.
you, Edward.
Yeah,
That's
thanks.
awesome.
Sharing all that
Great.
information is great. I know there's a lot of new changes coming, and there's a lot of things that business owners and even high net worth individuals are thinking about right now on
Absolutely.
ways that they can try to keep more money in their pocket. And we just wanted to try to educate people and just give them some really valuable information about, ways that they can try to reduce those tax liabilities, keep more money in their pocket. I think we said, the takeaways are, make a plan. Hire a CPA and work with professionals.
Absolutely.
I think those are the biggest takeaways today.
Get your team together.
Get your team together.
right?
Get your team together.
Get your team together.
So in closing, I just wanted to say thanks for watching. If you like more of this type of content, go ahead and like and subscribe to our channel. We're going to have some more sophisticated conversations with Ed, especially about the trust. I want to really dive into the trust stuff. And we'll talk about some individual strategies and have some more in-depth conversations about some of these things later on. But this was a great way to just introduce you to all of our clients and our viewers.
Absolutely.
And for anybody that wants to set up an appointment with Edward, why don't you tell everybody where they can get a hold of you?
Sure. We run Carlsbad Tax Services. We're located in Carlsbad. Our telephone number is 760-TAX-7000. Our website is www.carlsbadtaxservices.com. We offer 30-minute consultations. We're happy to talk to you. Obviously, we can't cover everything about taxes in a day. I've been doing this for 35 years, so I'd love to talk to you about your personal experiences and see if you can come in, meet our team, and see what we can do for you.
Oh, that's great. I'm Seth with AltaVista Insurance. You can reach us on our website at altavistainsurance.com. You can also check out our YouTube channel, find us on Facebook. You can reach us here at the office at 888-724-2124. Mark, how can they get a hold of you?
They can get a hold of me through our website or just call our local number 760-724-2124.
All right.
And Edward, thank you.
Guys.
We'll
Thanks
fist
for coming
bump, I
in.
guess.
Yeah.
All right.
Beautiful.
Be safe out
See
there.
you next time, guys.
See ya.
Bye.
Awesome.